And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I am your host, Bob Pisani. There is an explosion of new ETFs this year, close to 500, and the business of creating ETFs is exploding as well. Let's talk to two experts in this field, old friends of mine. Chris Hempstead is head of ETF and AP Portfolio Rebalance Trading at Mirae Asset Securities. Todd Rosenbluth is head of research at Verify. Chris, 500 new ETFs this year, $1 trillion in inflows, $10 trillion assets under management. What sticks out to you in this remarkable year? 500 new ETFs.
It's 500, and now since I probably gave you that stat, it's 580 ETFs this year. Obviously, the biggest headline of that launch, of those launches, was the advent of Bitcoin and crypto ETFs. That's dominating the growth in new assets. So $1 trillion, I think, overall to bring assets over $10 trillion this year in total AUM. But a lot of the growth in the new assets that came to market in ETFs is in the crypto space. But I think the most exciting thing we're seeing is new entrants come to market. Names that are not, your traditional BlackRock, Invesco, State Street, ETF players who've been around for a long time. But we're starting to see
some new players,
big players that have been on the sidelines for a long time coming to market and converting funds into ETFs.
I want to talk to you a little bit about that, but I want to get your thoughts, Todd, on this remarkable year. I mean, let's not overplay this. The biggest amount of AUM is still going into plain vanilla index funds. And for example, technology ETFs are still getting plain vanilla technology ETFs like the S&P, the XLK, the S&P technology ETF, still getting the big inflows at this point.
They are. So index-based products still dominate. In fact, the Vanguard 500 index ETF has already set a record for the most inflows for the year. We have had already a record for fixed income ETFs gathered thus far this year. We're likely, as you showed, to have it close to $1 trillion, which would be a record, passing the $910 billion that we had. Actively managed ETFs have really been punching above their weight this year, both in product development as well as the assets. It's been roughly a third consistently that we're seeing in actively managed ETFs this year. So really strong year across the board as ETF adoption continues. I
know I was asking you to both of you to pick ETFs that stood out. And Todd, one of your favorite picks for active management this year is the iShares Equity Factor Rotation ETF. The symbol is DYNF. And folks, if you don't know this, this is an actively managed ETF that's been outperforming the S&P 500. That's the bogey there. Tell us about that.
That's right. So it's outperformed this year. It's outperformed over a 3-year track record as well. This is a BlackRock ETF that had almost no money as it started the year. BlackRock added it to its model portfolios that many advisors use, shifting into more active strategies, and then it's continued to gather new money. It's close to a $10 billion ETF. Almost all of that has come in this year, and for good reason, as you mentioned. It's outperforming, so it shows you can have a core U.S. equity
It's been
strategy.
Outperforming, but I noticed in 2022 it underperformed. So in down years it tends to. I don't know what exactly the strategy here is, or it's a momentum strategy, or whatever it's doing.
So it's using the individual factors, so momentum being one of them, and value and quality and low volatility and size, and rotating within those. So yes, it's actively managed, so it isn't going to outperform in every year. Active management struggles from time to time, but over the 3-year time period, this ETF has performed well. And what really caught our eye is just the investor adoption has continued throughout 2024. It was not just a BlackRock model move.
But there has been some outflows, though. I mean, I look at with oil down, for example, energy has been seeing outflows. And I see, Kurt's very little interest in two big sectors we used to talk about all the time, thematic tech and ESG. Still nothing. I keep waiting for ESG to make a comeback, but nothing.
I think there's a lot of definitions that need to still be determined. People like the idea of ESG. They like the idea of thematics. The thing is, Bob, when you think about a 60-40 portfolio at its core, that doesn't mean you go 60% into thematics. The thematic sleeve, if you look at the $10 trillion asset base in ETFs, I think it's properly positioned right now. And then it gives individuals like the three of us and anyone that we know who invests the ability to have an opinion. I want to be overweight clean energy. I want to be, overweight some thematic energy sector, whatever it might be. It's a really, it's a real segment of the market that I think has room for growth as the overall pie of ETFs grow. But I don't think you're going to see thematics replace the core holdings in a 60-40 basic portfolio.
Problem with thematic tech, but if you're not wondering what we're talking about here, it's essentially things like cybersecurity, for example, pieces of the tech world.
Infrastructure.
You tend to buy these things at the top when they're exciting. 7 years ago, cybersecurity was a hot thing, and people were buying cybersecurity stocks and putting together ETFs around them, and so it tends to push the price up, and the most amount of enthusiasm is buying right there at the top. This is an eternal problem with ETFs. It's a popularity contest.
Investors in thematics, I think the investors in thematics, if you want to think of them as active managers, if they are, the ones that are going to have the most success are the ones with a long vision and a long time horizon. The ones who are trying to time the market and get in cheap and sell it at the top are probably going to get hurt more than they win. Long-term investors with good vision get into thematics, and they tend to win overall.
Let's talk about things that are growing this year that are different. So first, continuation of buffer products, for example.
Unbelievable.
That seems to be amazing. We've seen this, I was talking to you about this, Chris, this uptake on single security leverage products. MicroStrategy has 3 funds that are out, ETFs levered to them. And then we have the S&P 500 without the Magnificent 7, XMAG, that's brand new as well here. So I see buffer products, single security leverage products, like several stuff around MicroStrategy, S&P X Magnificent 7, all sorts of innovation.
There's a lot of innovation, there's a lot of creativity. Are they the most complex products in the world? No. Does it take a little more time to truly understand how a buffer product works? It does, but there's a lot of good material out there to help people understand.
I want to point this out, these MicroStrategy leveraged ETFs. What is it about MicroStrategy leverage? Why is there so much interest in leveraged ETFs around MicroStrategy?
I don't know.
They get good volume. Who's doing this?
Look, there's at least, as you see, there's 3 issuers on the screen that have brought a product out to market that's a single security, pivot point, and they each have north of $500 million in them. The street likes it. I think some of the street likes volatility. People like things that move around a lot. That's more of the day trader environment, I think.
Obviously.
I don't know if we would recommend for grandma and grandpa to put their retirement money into these kind of things, but with the right advisor, I'm sure they could find a home for it. But I think a lot of the uptake here is in traders who like fast money, no pun intended.
And they're not cheap either, so they're obviously profitable. Isn't that the real answer? There's enough people who are interested in trading this stuff. Obviously, this is
it would be very hard to make these products with a cheap management fee just because of the nature of how they're managed. They're managed with swap exposure and other derivatives.
Right. So how do you get like 2 times short or 2 times long MicroStrategy? It's a swap, right?
Yeah,
basically explain how that works.
Most of them use swap, and what they do is they engage with a swap counterparty to provide them the daily return.
So is it the swap counterparty that actually has it on their books?
Correct.
They're the one that does, not the ETF doesn't have it on the books. So they're in a swap agreement.
The swap counterparty holds the securities that afford the ETF the leverage that they need. In doing that, it absorbs balance sheet at the swap counterparty, and with interest rates where they are, balance sheet's not cheap. And so
it's the counterparty that's charging a lot of money because they're the ones that have on their books.
Correct. The ETF manager is essentially renting the balance sheet of the swap counterparty to get the exposure. And the cost of rent for balance sheet right now is higher than it has been in the last,
Well, that makes sense to me
years.
then. I don't know what the fee is for those, but we've seen ProShares. They do very well for their
ProShares
products.
and Direction.
90 basis points sometimes.
And they've been doing it for a really long time, and they've got the lion's share of leveraged assets. But they also have an audience of counterparties that include the largest global banks in the world. The new entrants to the leverage market may not have those deep relationships with the largest banks. They will eventually. So it's just a matter of time.
So you go ahead.
I was going to say, so that's this fear and greed obviously tied to investing. That's the greed part of it, these leverage and these risk-on strategies. The options-based ETF world also includes what you were talking about that are defined outcome or buffered or protection-oriented ETFs. So Calamos has launched this year a suite of 100% downside protection-oriented ETFs. So you can participate in the upside of the market to a cap and have downside protection. Just, again, a great sign of the innovation that Calamos and some of the others in the industry have brought forward this year.
And I want to talk about a new product potentially. You've heard of single stock ETFs, everybody. How about 2 stock ETFs? We just had Michael Venuto from Tidal on. He's a white label provider, very well known in the business. He recently filed for 8 2-stock ETFs that are pair trades. So they go long one stock and they short another. So here's some of them here, right here. One ETF, for example, goes long NVIDIA and it shorts Intel. Another one goes long Tesla and it shorts Ford. A third one goes long Amazon, it shorts Macy's. And you see here, one goes long Coinbase and shorts Wells Fargo, and there's 4 other ones. So essentially what goes on here is they imitate trades that are already being done by some traders. I mean, you know, Netflix versus Comcast is not exactly a new trade here. So is there a demand for these products?
I think there will be.
By the way, they've been filed. They have not started trading.
Yeah, if they get approved and when they come to market, I think there'll be demand for it. And look, I don't want to make a direct correlation to parlays or anything like that, but you see how people can look at the market differently and say it would just be easier if I could buy one product, do one trade, and put on this investment bet, if you will, that does what I want it to do. Long one stock, short another. I want to play the spread. These won't be complicated to support as market makers. The exchanges will be able to support these products, and the market maker participants should have no problem supporting them. But again, the work will be done. Can they raise assets like some of these, MicroStrategy products? Right. I suspect they will.
Well, people who are doing this now can do this fairly easily. You can go long one and short the other. What advantage does an ETF have? It's like the lazy man's long short here.
It's easier. Instead of having to short something yourself, the ETF is going to do that for you. And so there's a convenience factor that's out there. The same way that it's the single stock leverage ETFs, it's easier to be able to do with an ETF. Or if you want to buy the 30 stocks in the Dow Jones Industrial Average, and have it just continue to do. ETFs just make it easier. They're much more mainstream. People understand more and more how they work. I think the ETF adoption is going to continue, even if we have some of these niche-oriented products sitting side by side with Vanguard 500 in a portfolio.
Yeah. So you were talking about new participants this year that are coming. Anybody sort of stick out to you?
I mean, some of the bigger ones, look, I mean, Eagle Asset, I think, was one that I mentioned. Rockefeller, they've been around for a long time. You mentioned
Rockefeller, of course, an asset management.
Yep, Calamos. I mean, these are big, legacy, generational managers that are, coming into the ETF market for the first time. I think it's exciting. I think we'll see a lot more. There's a lot of buzz in our industry around whether or not the share class version of ETFs gets approved sometime in the next, 12 to 18 months. If it does, I think we would expect another few thousand ETFs to come to market very quickly.
Right. For those of you who don't know, you're using clipped language here as always, but Vanguard was the only one that had essentially the same asset class in an ETF and a mutual fund, and it was tremendously beneficial to them.
Correct.
And many other people want to do that, but they had a monopoly on it, and now the SEC has to rule on whether they want to allow that.
Yeah, the patent they had expired, and so now once that patent expired, then others have filed. It's not an automatic approval. There's a lot to consider, but it's all being discussed, and I suspect that if it were to pass,
do you support having that go through?
I have no reason not to support it. I mean, I don't have a vested interest in it, but
I do. I mean, I think it's great for the industry. There's 34 different asset managers that right now have filed to do so. BlackRock and State Street were the latest ones to do so, but Dimensional Funds has helped to lead this charge. I think it's great for the industry if investors, the industry being investors as well, for investors to have the ETF option of a pre-existing mutual fund portfolio. That's great. The tax efficiency is so much better in an ETF vehicle.
It could save a lot of money. I got to ask you about the presidential election. We're right on the eve of it. Does it make any difference in ETF trends if Harris or Trump wins, or can you see anything
Look, I think
different?
I certainly think that depending on what the outcome is, sectors like energy, regional banks, high yield bonds, the emerging markets, all of these sectors probably are pricing in some sort of a move one way or another if Harris or Trump. Again, I think the individuals and the investment professionals will be the ones to decide how they want to weight their portfolios accordingly. But I think sectors like those are going to be in play. So I would keep an eye, look at the regional banking sector, look at the emerging market equities, look at high yield bonds. What else could there be?
Well, I would just jump in.
Energy, obviously, is a big sector that could go either way. So
I was just going to jump in. People have an idea of what could be a winner and what could be a laggard, but we saw clean energy actually perform better under the Trump administration. Clean energy ETFs than the Biden administration, even though the Biden administration passed clean energy
How do you explain that?
legislation. You're asking me to explain why the stock market does what the stock market does. It's the underlying stocks that are driving
it was a hotter topic in 2016 to 2020 than 2020 to 2024.
I think this election, I think clean energy will favor a Harris win. It's just my opinion. I just think that they seem to be pushing that a little bit more, and it does feel like the Trump team has dialed that back a little bit. So it would make sense that the clean energy ETFs work a little bit in favor. Infrastructure is a tough one. I feel like both parties really want to have a solid plan for infrastructure and infrastructure expansion. So I feel like infrastructure is a win-win.
Yeah. Tell me who's opposed to infrastructure. Who doesn't think that the bridges are crumbling and we need
So that's a win for the
right. I want to know who's against that. I want to see the bridges crumble.
Who's against modern rail system in the United States?
Yeah,
we
don't have.
No, we don't. You need a chiropractor on some of these trains after you get off.
But the Global X U.S. Infrastructure ETF, the ticker is PAVE, P-A-V-E, is a great ETF to get exposure to those trends. It's benefited from the recent legislation that's been passed under the Biden administration. It could be a winner regardless of who wins.
Okay, going to have to leave it there, folks. Interesting discussion. These are the cutting-edge trends. We're going to talk a lot more about what's hot in 2025 coming up in future episodes of ETF Edge. But that does it for this week's ETF Edge. My thanks to Todd and to Chris. We've asked Chris to stick around and give us more observations on ETF trends in 2025. That's coming up on the ETF Edge podcast. And remember, you can see all of our shows on our website. That's etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter. Your weekly update on the hottest trends, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.